they've gone ahead and created an actual ETF that allows people to not only make fun of the Cramer trades, but also to potentially profit off of them, right? And so there's two tickers here. They're SJIM and LJIM. We'll tag them in the top of the page for people to check out. But Matthew, we kind of were curious on the inner workings of this. We've been reading off the results on like our after-hour spaces. So talk to us a little bit about how this even got started and how it's possible to actually do.
Yeah. So, and thanks for having me. So, this has been an idea that, we've been working on for a long time, just based on the standpoint that, we understand that the consensus on Wall Street is typically wrong, and have been looking for ways to monetize that for quite some time. And the beauty about Jim Cramer is, he's the consensus on steroids, and he just has an amazing, I guess, God-given ability to just get some things epically wrong, along with just, the normal stuff. But he tends to make epic wrong calls, and he does it consistently. I don't know how he does it. One of these days, I'd love to talk to him and try to figure it out, but he does. And as far as how this works, it's unfortunately kind of what you'd think. We got a team of 3 people, unfortunately, including me, and so we're watching Squawk on the Street every morning. We're watching Mad Money every night, and we're monitoring his tweets and trying very hard not to get blocked so we can still keep monitoring his tweets, but, and have some fun too at his expense. So, we're looking at that stuff every day. If Cramer says, buy something, then in SJIM we're shorting it, in LJIM we're buying it. And if he says he doesn't like something or avoid it or sell it, then we're going along that name.
Okay, so is there any discrepancy? Because we talk about how sometimes they talk about, oh, they're like slightly bullish on something, they're maybe neutral but leaning one way or the other. Does it have to be like a affirmative one way or this way? And I think he also does like multiple shows. He has that show. He has his recommendations to his paid group, right? Like, is it kind of coming from everything or just the Squawk on the Street?
So not the paid group. The paid group is the only thing it doesn't come from, because my guess is that he's got people helping him. That's more of a long-term portfolio. I mean, it probably sucks because you just expect something like that to suck. But I'm much more focused on the stuff that he comes on in the morning or comes on in Mad Money and wants to talk about. To me, that's where the real alpha is going to come from. What he wants to say, what David Faber wants to ask him about, and and what people want to call in about. And then we've got to kind of make a determination. There are some times when he pushes the buy button and it's obvious. I mean, he's got a massive man crush on Jensen Huang at NVIDIA. We know he loves NVIDIA. That's pretty obvious. He's got a little bit of a man crush on Zuckerberg. We know he loves Meta. Other times we've got to make a judgment call. And typically, what I'm going to do is, if it's like a major thing, for example, Deutsche Bank, he's not a bull on Deutsche Bank, but we still got a small short position in it because he said they're not going under. And, and we know his track record on calls like that. So I want to have some exposure, but it's not going to be as big a position as, say, NVIDIA would be, where, again, I mean, we're thinking of doing a drinking game where every time he says Jensen on the morning show, we have a drink, but I'll be drunk by 9:05.
Yeah, Evan?
No, that was a great quote at the end. So that kind of also goes to a question that the first one that I wanted to ask here was, how does position sizing work? Is it really just everything is the same, or is it, he mentions Jensen Huang every single 50 times a day, and that kind of makes it X times bigger? Is there anything with how much he mentions it, or maybe saying I love something versus I like something? What are the kind of the nuances there?
Yeah, so and that's exactly it. So, Nvidia is going to be a larger position. Meta is going to be a larger position. So, we're looking at things like that. I mean, Nvidia is obvious. You just can't stop talking about Nvidia. Meta was a normal size position, which in SJIM is normally around 2.5%. And then he sent out a tweet saying Meta is becoming my favorite stock. So we had to bump that up. So things like that are consistent themes are going to be a larger size than, somebody calls in and says, hey, Cramer, what do you think about this? Oh, yeah, I think this is a good stock. All right, that's going to be a smaller one. Then, now his newest one is Micron. So, yeah, it's going to depend on whether it's a Cramer fave, as he likes to call it, or just something someone's calling in about.
Got it. Just making sure. Sorry, someone called me in the middle there, so just making sure I'm not cutting off you, Matthew, or anything like that. That's why I was waiting an extra second there. So there's two ways to go about this right now. There's SJIM and LJIM, right? And kind of inverse. Can you talk to us about the performance since inception and how often moves are being made in these? And are these daily rebalancing?
Yeah, so these are daily rebalancing because, daily rebalancing as long as Cramer's not on vacation. So he has taken a couple of vacations since we've done this. So obviously, when he's away, there's not a whole heck of a lot for us to do, unless he wants to send one of his, invite me to your funeral tweets. But I don't know that he tweets when he's on vacation. So, daily rebalancing when he's around. They both launched at 25. LGIM is at 24.74 and SGIM is at 25.20. So SGIM has outperformed, even though, the markets, we launched at the beginning of this month. The market is up this month and the short GIM is still doing better than the long GIM, which again goes to show what a great stock picker he is.
How many positions?
Okay.
Or sorry, Wolf. How many positions are you typically having in this, Matthew?
So yeah, SGIM, I'm trying to have 40 to 50. LGIM, I'm trying to keep it at 30 to 40. It gets tricky sometimes when he comes out with like one of his lists, where the other night he came out with his strong balance sheet list of the amazing thing he figured out in the market, that companies with strong financials are doing well, and he came out with like 21 names. So things like that get difficult. Sometimes we go over a little bit, but then I'm always trying to scale back. What I don't want is I don't want to be 100, 200 stocks, and then you're really diluting the effect of kind of that one name that just blows up in his face.
So if he puts out, like one of those like CNBC lists that he puts out every once in a while with 10 stocks on it, are you just taking all of those equal weight in the opposite direction?
So historically, yes. What I'm trying to do now to get it kind of, because I don't want to get too many names. And we did go through a period where he put out like 3 lists, and I think we were over 60 names, which I don't want to be that high in names. So what we're trying to do now is, if he's coming up with like a sector theme, maybe we'll use an ETF in that situation. If we can't, we can't. But if it's something where he's coming out and saying, hey, I love, companies with, or, I love semiconductor companies, and lists off 20 of them, we'd probably just say, what, screw that. I'm going to buy or I'm going to short the SMH.
I'm kind of curious what the legal process was like for getting it approved. We kind of talked about when you first submitted this, and then there was, I think, like several months to actually getting it going and approved. And just kind of curious what it was like during that time, if there was back and forth between you and, people approving it. Just like, what's that even like, getting an ETF like this approved?
Yeah. So I thought we were going to get some issues with CNBC. We didn't, which was good. Yeah, I was prepared to pivot on the name if we did, because I mean, I don't know if you guys know, we did SARK, and when we did that, we definitely did hear from, Kathy Wood's attorneys, and we changed the name. So I was prepared to do that here, but nobody reached out to me.
What was the initial name on Sark before you had to change it?
So it was the short ARK-K ETF. And we knew that they were going to come back and fight us on that. We knew exactly what their argument was going to be. So we said, you know what, we'll file it like that so everybody knows what it is. And, and then we'll pivot. But once we get the name I wanted out there, I mean, everyone knew what it was. But yeah, in this case, that's what we're going to do too. And no one from CNBC reached out. So that was good. The SEC was a problem. Normally when you're launching an ETF, there's a 75-day process. In that 75 days, they come to you with a list of questions, which are usually pretty benign questions. You answer them and you're allowed to go effective. This took probably about 5 months instead of 3 typically total. So there was about an extra 2 months of the SEC looking at it. What they told us is because it got so much media buzz, more eyes at the SEC had to look at it. But really, at the end of the day, I think the only major thing is, so originally we filed this as, the Inverse Cramer and the Long Cramer. Their argument was having Cramer's name in the ETF was misleading because he wasn't involved in it. And our argument was, well, not having his name in the ETF would be misleading. So we compromised by adding tracker to the end, which I actually like better. So I think that was a pretty cool compromise.
Did you reach out to Cramer at all to try and get him in on this? I mean, it's all fun and games, but I mean, why not make some money on it?
So I have reached out to him in the past. When I first thought of this idea, I actually tweeted, and I don't think he reads his tweets. And I mean, if he does, he might have seen it and thought it was a joke. But I actually tweeted, I was like, hey, look, let's talk about this. And I'm willing to donate some profits to your charitable trust. I never heard back. I may have said that too somewhere on something, whether it was a podcast or a TV interview. I don't remember, but I may have said, hey, I'm willing to do that. I do know some people who know him, and before we did this, offered to introduce me, and now that I've done this, I've kind of backed away from that. So, I don't want to push too hard. I mean, I do know some people over there. I know Bob Pisani pretty well. He's been ignoring me lately, which is interesting. And, I did meet Ron Insana a couple of weeks ago, and he said, hey, don't tell anybody this. And I'm telling a whole bunch of people on Twitter who I don't know, but don't tell anyone this, but good job. So I found that interesting. But yeah, no, Cramer, I have not had a chance to talk to him, but hopefully one day I will.
What would you ask him if let's say you were like granted a 20-minute interview with Cramer, what type of questions would you ask him?
Oh, wow. Yeah, I don't know. I'd rather him have an interview with me and him ask me questions than me try to ask him questions, just because, I mean, how could he answer my questions? It's just amazing to me how he can continue, to do what he's doing. I mean, and it's not just now. I mean, look at what the stuff he was spouting in 2008. And there's no accountability. And, and CNBC brings him on day after day and treats him with deference. Hey, let's get Jim's take. It's, well, but you got Jim's take yesterday and he was wrong. Are you going to, at least mention that? So someone who's tuning in, realizes that this guy doesn't have a 100% batting average. Yeah, so I mean, and really, those are the questions I'd want to ask him. I mean, how do you do your analysis? You're getting on stuff, way late. Shouldn't you know better? I mean, he's recognizing things when, guys who know what they're doing have been in them for 2 months and are now getting out. And then he's saying, hey, this is what's working. It's like, dude, I mean, I just went, I mean, even if I wasn't listening to you, yeah, I've been long that for 3 months. I just went short because it just topped. And you're just noticing this now? Or, how can you continue to take these phone calls? And, I don't know about you guys, but there's a group of stocks that I would say I know very, very well. But if you start hitting me with phone calls, yeah, maybe you get one of them, but I'm not going to know, every single stock. And Silicon Valley Bank was a perfect example. I mean, he had no idea what he was talking about. Oh, yeah, I like Silicon Valley Bank. I mean, how can you continue to do that to people? So, I mean, those are the questions I would ask him. And I think my 20-minute interview would last about 2, which is why I'd rather have him ask me questions versus me asking him.
I'm going to pop in really quickly. I do appreciate that. Quickly, if anyone wants to do their own research into some of the stuff we're talking about, we did pin the link up to the ETF website in the nest above. You can go in and check that out and dig in more to both the Inverse Cramer Tracker and the Long Cramer Tracker. And we also appreciate Matthew for coming on the spaces. So make sure you're giving him a follow. Check out his account. And we also appreciate all the other fantastic speakers and our friends for joining up. Make sure you're checking out everybody up here. I do have one quick question, and I want to maybe throw it over to Jaguar. I know we've talked about it a little bit, this, and he might have some questions or thoughts in general on this direction. But how long do you hold these positions for? Is that kind of like a static thing? If Cramer says, this is my favorite stock for the next month, are you going to hold it for the next month? Is it variable, or is it kind of like a 5-day type thing?
So it is variable. He's giving names every single day. So I've got to add those names into the portfolio, and typically I'm going to take out older ones. But, again, stuff like NVIDIA, stuff like Meta, I mean, I can't take those out until, he switches his view on things like that. Or, maybe if, we're sitting here a month from now and he hasn't mentioned Jensen's name, and, in a couple of weeks, maybe NVIDIA is something I would take out. But yeah, every day I've got to take something out because I'm adding something in. So my preference is the stuff that people call in about versus the stuff that Cramer wants to talk about. Because, my sense is if Cramer wants to talk about it, that's his real top of the mind stuff versus, what people are calling in on the lightning round.
I have a couple of questions real quick. So one of them, I actually thought this was interesting. For those that are following the link that I pinned up top, and it's pretty straightforward. It's just CramerETFs.com. I didn't notice this, but you guys actually have a email that people can sign up for as well, where there's a weekly TCM newsletter, a daily, and then there's just the daily trades. Can you kind of go over what people are getting in those?
Yeah. So, the daily trades, I mean, we're doing what Kathy Wood did because I thought that type of transparency was beautiful. So, every day, typically it goes out around 4:15 unless we're busy doing some other stuff. We're going to send out the trades we did both in SJIM and LJIM and tell you, what they were. So, hey, we added a new short in XYZ. We covered the short in ABC. So you'll see every single day the trades we're doing in the fund. We also write a daily newsletter. So, I'm not just an ETF issuer, I'm a trader. And most of the day I'm sitting here trading my own account. So, we write a daily newsletter about the markets. And, in stocks we're looking at that day, whether it's long, short, and then, we also do one on Monday that's a little more detailed than the daily, put out our watch list and, and things of that nature. So yeah, we've got the sign up sheet on CramerETFs.com and also Tuttle Cap, which is our main site, where we also write white papers and stuff every once in a while when I have an interesting idea or remember to do it.
Okay, I love this other question that I got. This was super interesting. Somebody asked that it seems like, over time, maybe as you even open up, more ETFs and everything, it's going to be difficult to just, watch Cramer every day, as, much as it's not difficult already, right? So is there any thoughts around potentially using some type of AI tool because there's AI tools that can be trained for listening and have that kind of listen through, do some sentiment analysis, and basically just give you the readout of like, hey, here's what he's bullish, here's what he's bearish on?
So I would have to get a real good comfort level that something like that can understand the nuances. So, like yesterday was a great example on Squawk on the Street. He was talking about Micron, and it really was not clear at all where he fell on Micron in the morning. Then later on, he said something, on his investment club or something like that, where he loves Micron. And this morning he said, he loves, or last night at some point he was saying he loved Micron. But it was, and there's so many things where it's not always 100% clear. So I don't know that, AI can do that. I mean, if it can, and I didn't have to watch him, that would be awesome, because I'm sure, just like cigarette smoking, someone's going to come out with a study at some point that shows watching Mad Money kills brain cells. And I'm going to be sitting here, 65 years old in a nursing home, not knowing who I am. So I definitely don't want that.
Yeah, I was going to say, you got to be careful there with your health. Okay, I think
quick question, Matthew. Are you going to have exchanges list options on both of these instruments at some point?
Yeah, so the way that works is it's based on volume. So as volume starts to pick up, the option guys are going to get more interested in listing options. So we will get that done as soon as we possibly can.
I had another question here, which is actually around the actual price return. So right now, so these aren't inverse of each other, right?
They are not.
Yeah, they're more, because it's more what Jim Cramer says he's bullish versus bearish on. And so when you look at SJIM right now, that one is it had a little bit of a down day or down week. So that one's down about a little bit under 1% on the year. And then you look at LJIM, which is the one that is long Jim Cramer, and that's down even more. So that one's down 1.83%, so almost down double as much. Can you walk me through, the interest, I guess, with both of them kind of being down? It's like Cramer can't win.
Well, so they officially launched at 25. Both of them did. So actually, SJIM is up a little bit on that 25 price. Depending on what you look at, they may base it off kind of the first trade, but the portfolios were both struck at 25. So, so SJIM is actually up almost 1%, 25.20, and LJIM is down, pretty much 1%. So LJIM's down a little bit more than SJIM is up, which, again, over a period where I believe the market has been up, in very short sample size, obviously, but, just telling about his stock picking ability here.
I saw the trades yesterday. A lot of Jim Cramer being bullish on names like Apple, Berkshire, Walmart, etc. So you guys were selling it short. So when market's going up, I could see that. We'll see how long Cramer is right for. Jack, I see you have your hand up.
Yeah, thanks, Matthew. This is really cool. It's fun and probably pretty useful to a lot of people. This product. But here's the question I have for you. So everything kind of moves in cycles, right? Like there's times when Kathy Wood and her stocks are killing it, and then times when you basically do inverse arc. Right now, Jim Cramer is kind of a meme, and everybody's kind of doing the opposite. But do you think there'll come a time where basically the market turns, or like basically too many people are taking the inverse Cramer approach to the point where that's the crowded trade, so to speak? And if so, like how do you think this product would handle that?
Yeah, great question. So, a couple of things there. When we did SARK, I did SARK for a couple of big reasons. I mean, number one, I thought it would be a better hedge. Again, me being a trader, if I had a negative view on the market, I'd buy it, and I also love ETFs. So I'd buy, an inverse Qs or an inverse SPY, ETF. The problem is, number one, you need to buy the 3x lever to actually have a move. And number two, you're shorting Microsoft, Amazon, Google. I mean, that's not a long-term prescription for success. I would rather short, Teladoc and Roku and, whatever other crap she's got in her portfolio. Do it on a 1x. There may be a 2x version of that coming out soon, just a preview of coming attractions. And it was something you could hold on to longer. Now, I mean, someone just criticized me the other day on LinkedIn. Well, if you hold on for to the SARK for 10 years, the S&P is going to outperform it. I'm like, okay, I'm not saying you buy and hold SARK for 10 years. I mean, I tactically trade it. There are times I'll own it, there are times I don't. SJIM I look at as something entirely different. I look at SJIM as something you can buy and stash in your portfolio. And that's actually what I've been doing. I mean, I buy the dips on it. Because, I don't think you're going to get a lot of people trying to inverse what Cramer is doing, because again, who the hell is going to want to watch Squawk on the Street and Mad Money every day? No one except for me is crazy enough to want to do that. And even if you think it's something you want to do, watch Mad Money once and then tell me you're all right watching it every single week. But the cool thing is, again, Jim represents the consensus. He's getting into stuff after the smart people have already been in it and have already left. And it will end up being something that's totally uncorrelated to anything in your portfolio. And it's not a 100% short portfolio, it's long short. So what I would expect is that as the market is going up, Jim's going to get all bulled up just like all the other idiots do. And the portfolio is going to get more and more net short, which is what it's done. A couple of days ago, we were like 60% net short. Right now we're 80 because Jim's getting more and more bulled up. And as the market starts going down, Jim's going to get more and more bearish, and the portfolio is going to get more and more long. So again, I think this is something that you can just buy and hold, and it becomes a portfolio diversifier. Basically, it's a counter trend type of strategy where as the market is going up, it's getting more bearish, and as the market's going down, it's getting more bullish, which I would argue for most people is going to be very different than whatever else they hold in their portfolio.
I have a little bit of a different question in there. How does it work with timing from when he actually makes a call to when you buy it? Sometimes he speaks, I think both the shows actually, the majority of them are before and after market close. Obviously, you can still trade during them. But yeah, how does it work with timing when he actually calls out the play versus when you guys take it?
So most stuff we're doing at the open, unless, so he's on, Squawk on the Street from 9 to 10. So, if he says something like today, he came out with 2 names after the market opened. What did he come out with? Bank Santander, he came out with after the market opened, and Square. So those we did, pretty much right after, he made the mention. But, and if he tweets during the day, as soon as I see the tweet, we'll go out and we'll do that. But for the most part, we're transacting at the open.
Good. Yeah, go for it, Evan.
Yeah, I was actually going to more or less throw it over to you.
Okay, no problem. So, Matthew, right now, what's been the volume that you've seen on these? And to walk me through kind of, over the next year, how you get it to a place where maybe even like institutions are looking at it.
Yeah. So, LGIM, obviously not a lot of volume. In that one, I look at it as a tactical trading vehicle because, again, Cramer is the consensus. He's going to be talking about whatever stocks happen to be hot right at that moment. And there are going to be times when that works. And, so I look at that as a tactical trading vehicle. I mean, it's not trading very much. I didn't expect it to, at this point, and we'll see how that goes. SJIM is trading about 30,000 shares a day. From an institutional standpoint, it's got to get up to about 25 mil for institutions to start getting involved. A couple of things there that are interesting. So one of the things we didn't realize when we launched SARK is, we started talking to a lot of different swap desks to do the swaps for us. And every single one of them at the big banks, the JP Morgans, the Goldman Sachs, the UBS, said, what, we do structured products internally and run this for clients. And we've seen institutional money go into SARK. I don't know whether institutions will get involved in Cramer or not. One of the things I saw that was really interesting, I don't know whether it's a coincidence or not, but we started tracking it kind of as if we were running the fund back at the beginning of January. And and there was one day I was trading a couple oil stocks long in my portfolio, and I noticed a tweet from Cramer, and he tweets something along the lines of, now's the time to get into oil stocks. It's like, all right, interesting. Immediately, and I don't remember what I had, Oxy and Halliburton, whatever it was some of the major oil companies, and immediately they start to go down. It's like, what the fuck? What's going on here? And they go down, I'm like, all right, well, hold on. I sold them. I immediately pivoted, bought a 2x inverse oil stock ETF. That starts ramping up, and and this went on for like an hour. And then stuff started to plateau again. I sold the inverse ETF, made a nice profit. It was like, what the hell just happened? Is it a coincidence? I mean, Kramer's reverse Midas touch, that the moment he tweets about oil stocks being a buy, they go down? Or is there some institutional money out there, watching these things and immediately doing the opposite? I have not seen something like that since, but I am, my antenna is up, and, because I definitely found that real interesting.
All right, I'm going to ask Matthew the question that I think is the most often asked question that we get when we talk about these. What happens if Jim goes long SJIM?
Yeah, I mean, and that's simple. The universe explodes and we all die. So let's hope that he doesn't do that. My sense right now is that CNBC has decided they don't want anyone talking about this in any way, shape, or form. When I filed, Jim was all over this. He couldn't stop talking about it. The fact he has not said a word leads me to believe that CNBC told him, you cannot say a word, because his ego is, I mean, anyone who watches him know he's got an ego. There's no way he would voluntarily ignore this. And, and I have heard through the grapevine, that they're scared, that there was some scandal with the Nigerians leaving CNBC, and that's made them even more scared of this, which, makes sense if, we have a sustained period of time. I mean, the fact that SJIM has outperformed LJIM over 3 weeks isn't proof of anything. But, if we're sitting here a year from now and LJIM's getting its ass kicked and SJIM's up big, that's a tough one to explain, how you give this guy his own show and his own hour in the morning. you're basically giving this guy 2 hours a day. So, I mean, I can see why they're scared. So I don't think he's going to mention it, but, I keep goading him on Twitter, hoping to, and again, I don't think he reads his tweets, unfortunately. But I keep hoping that, one day, like he did to Sark, which was the best thing that ever happened to Sark when he did his whole Cuddy Sark thing. I hope at some point he just says, you know what, screw it, I got to mention this.
Have you noticed that on the CNBC account, they've changed the way they release the Jim Cramer content now? They used to put out tweets of every single article. They don't really do that anymore, and then they don't post it to YouTube as quickly anymore. Timing was a little weird. It was kind of about the time your ETF started, but I wonder if you noticed that, and they're kind of, or maybe you guys are watching it live no matter what, but they're really forcing people to get it live if they want that Cramer in the moment.
I didn't notice it. I mean, it doesn't surprise me. I mean, is it a coincidence that he was on vacation, the day the ETF launched, and the ETF launched on a Thursday? I mean, one thing if, you're off on Monday, well, who takes a vacation? I mean, if you're going to take a week off, do you do it on a Thursday? I mean, maybe he wanted the long weekend, but I thought that was weird that, he was gone that day. Certainly there have been some instances where he's taken accountability. His Medi-call, we hadn't launched at the time of the Medi-call, but we had filed. And, New York Post wrote an article after that kind of blaming me for Cramer basically crying on air. He took accountability for Silicon Valley. And there have been some times where, David Faber's, not tried to, roast him, but, said some things that, I'm thinking, that's interesting, which, would be great. I mean, again, one of my motivations, I mean, obviously I want products that are useful, but one of my motivations with shorting Cathie Wood and shorting Jim Cramer are to put out the other side, because all you're hearing, and again, people who are on the spaces are not, the blind masses that don't know any better. I mean, all you're hearing is, oh, Cathie Wood's the next Warren Buffett. And, oh, we're going to bring Jim Cramer on and tell us what he thinks because he's right every single time. Someone's got to take the other side of that and say, well, wait a second, let's think about this and maybe ask some questions. So, yeah.
So Matt, I know you mentioned earlier, that you said roughly 30 to 40 in LJIM and then 40 to 50 in SJIM. Did you was that number just kind of arbitrary? How'd you come to that? Because for me, I guess just on a rudimentary glance, that feels like it would be a lot. I'm not sure that he even gives 40 or 50 solid opinions, but where are you sourcing that many ideas from? Is it entirely off of these CNBC lists and the stuff he says on his shows? How are you maintaining 40 to 50 ideas?
Yeah, and quite honestly, it's hard to not go over, because remember, it's the whole hour on Squawk on the Street. So today he had three. He had Disney, he had Santander, and he had Square, where he came out positive on all three of those. And we thought fairly definitively positive on those. And then remember, on Mad Money, he's typically taking, not just the lightning round, because he also takes, 2 or 3 calls in other segments. He's typically taking 5 to 7 phone calls. And, and every once in a while he'll punt. But for the most part, he's giving you 5 to 7 opinions every single night, plus maybe other things he's talking about. So what did he have last night on Mad Money? So he had 1, 2, 3, 4, 5. There were 6 stocks coming out of the lightning round on Mad Money last night, plus the 3 from this morning. So that's 9 names that we had to add to the portfolio this morning. So that's why it's tough. But I don't want it to get too much. Basically, if he mentions something in the lightning round, I'd like to hold on to that name for a week, if I can hold on to that name for a week.
I had a question to throw in here. Do you believe that at this point, just because of the track record, there are hedge funds that are purposely shorting his picks, and that could be benefiting SJIM?
So I think it's possible. Again, the oil example I brought up, and it'll be real interesting to see, if we can get this thing over 25 mil, whether institutions come in. I mean, I've heard conspiracy theories. I mean, I got a guy who, does a show on Newsmax who tells me he has proof that Jim, tanks stuff on purpose and has an army of short sellers out there who make money on it. I can't, that seems somewhat unlikely to me. I got to figure this guy's got so much money. Why would you do that? But then again, someone else I talked to yesterday told me they heard the same rumor, somewhere else. So, I think a lot of stuff is possible. And, I am very interested to see if we get institutional money in here like we did in SARK.
Got it. Okay, appreciate that. Stock market news. Anything else come top of mind for you? But actually, before you do that, one more time, just wanted to point out to people are probably curious, what is Jim Cramer long and short on right now? If you go to the top of the space, we have 2 tweets pinned. The first one is the trading activity from yesterday, and it'll show you the buys and the sells. And then next to that, I also have a tweet pinned with the link to the website, which is krameretfs.com. You can check it out up there. Maybe you want to bookmark that tweet just in case you want to come back to it and see it anytime. What he's long or short on. Website's really nicely put together, super easy to scroll through, get a good idea of what's going on here. Who came up, Matthew, with this upside down devil bull on Wall Street?
That was my web designer. I wanted his face, but nobody was real comfortable with that from a legal standpoint. I think it's somewhat of a gray area whether I could stick your face on the website. So we decided we're already poking the bull enough. So, they came up with that instead.
I do like that website. I like that design when I click into it. I'm a fan of it.
Have you, Matthew, back tested this over the last, several years?
So I haven't. Yeah, so that's the problem. I get that question a lot. How do you do it? Because not everything is a buy, sell, sell, sell. There are times, again, you've got to make a judgment call.
This would be nearly impossible to backtest accurately.
Right. And then, when do you sell it? And again, I don't care as much because, again, what I'm trying to do here is I'm just trying to fade the consensus. Because, I know that, again, the consensus is typically wrong. And if you can have part of your portfolio fading the consensus, that's a powerful diversifier. And Cramer is just perfect for that. And again, kind of like, Kathy Wood and Sark, people would come up to me and be like, well, hey, why didn't you just come up with your own basket of unprofitable tech? It's like I could have, but A, Kathy's already done it, but B, her risk management sucks. The research is awful, and they're the worst traders on the face of the earth. So that just adds to it. And Cramer, I look at the same way. I want to fade the consensus, and it doesn't hurt that Cramer swings at every pitch, and just has this uncanny ability to make some epically wrong calls. So if I want to fade the consensus, what's better than Cramer?
Do you think, to a degree, though, Matt, and I'm not necessarily saying it's 100% true because I know Jim has made terrible calls in the past as well, but to a degree, I mean, this narrative of like fading Cramer has been more exacerbated in the the drawdown of the past year than it was before. I mean, in 2020, everyone was throwing gum at the wall and it was sticking. including Cramer, right? Especially Kathy Wood. I mean, RK did very, very well during the bull market, right? And so you would expect that RK will probably do well in the
Oh,
next
without a
risk on
doubt.
environment, right? And I imagine that Jim's picks will probably do well in the next risk on environment because everyone's picks to the long side do very well in that kind of environment. So how are you, I guess, thinking of that? Like, are you planning on other products whenever we do re-enter a bull market, whenever that may be?
So a couple things to unpack there. So remember, in a raging bull market, there's still going to be things Cramer doesn't like. And the cool thing we've got right now is Cramer does not like money losing companies. And and who knows, he may change his view, but let's say we entered into a raging bull market right now and you started calling him up about, you know, pick your unprofitable company. He's not going to like it. We're going to go long. So we're always going to have longs in the portfolio.
So you're
The
gonna
lo-
let the broader market kind of inform your bias. So like in a bull market, you'd be fading more of his short calls, and then in a bear market, you'd be fading more of his long calls. Is that kind of the idea?
Well, so I mean, that might go into position sizing, but the portfolio is always going to be long short. We're always going to have longs in it. But yeah, in a raging bull market, we can tweak the position sizing so that the stuff he doesn't
Not to
like.
interrupt you, Matt, but just a follow up question on that specifically. So, what is your current distribution of longs and shorts?
So today we're 83% net short right now. So and I think we're a little over 100%
Okay, so
invested.
to a degree, then you is that more informed by the fact that you guys are still perceiving us to be in a negative market environment, or is that heavy short bias more informed by the fact that Jim just makes more long calls than he does make short calls?
So it's both, and I want both of those impacts in there because again, he's and if you listen to him, he's all bulled up right now. I mean, he tweeted, hey, the Silicon Valley Bank is the best thing ever because the Fed's going to pivot and it'll be the best buying opportunity like ever. So he's all bulled up right now. So I want that reflected in the portfolio because I mean we got PCE tomorrow that comes out hot. He could he could be epically wrong on that call, but also the fact that the market's not going anywhere. I mean we're just sitting here, bopping around between the 200-day and the 50-day on the S&P, not really going anywhere fast, and there's a lot of shit on the horizon. So I'm not saying we're still in a bear market, but certainly I don't think you can come out and say, "Oh my God, we're in a great bull market right now." Now, if that were the case, yeah, we'd want the portfolio to be, a little bit more, less net short. But and he typically tends to fix that. So again, we were 60% net short maybe a week ago because there was a whole lot of stuff he was bearish on that people were calling in and he was commenting on. But yeah, I mean, I see it. It's always going to be, there's always going to be longs in the portfolio. In the market environment is most likely going to, lead that. And then, as far as other products, stay tuned. There could be some filings coming out in the next week or so for some interesting stuff on the long side.
Is it 3x inverse or something else, Jim?
I'm sorry, what?
Is that 3x Jim Cramer or something like that?
No. I mean, we're not doing any new Jim Cramer products, but there may be some interesting things for ARK and Tesla.
ARK and Tesla. I mean, you guys already have those, right? Well, no, that was other company. Yeah, okay.
Right, but but there's some other things that we can do there that have not been done yet.
Matt, so I'm just looking at some of the audience questions, and one of the most asked questions here is, when is the Inverse Cramer ETF coming out?
That one is actually, we're filing for that on Monday.
Awesome.
Can
Wow,
we make
a
it
lot coming
3x
next week.
leverage Inverse?
We're definitely making a 3x leveraged Inverse.
Yeah,
That's
I'm
a
pretty sure
no-brainer.
SEC will be very happy approving that.
Yeah,
Matt,
I
I
mean,
have another.
actually, they would be. I talked to them. They don't like you very much. You may be getting a call actually soon.
Yeah, I was expecting that. Like they said, they will not approve any 3x leverage
They said he
unless
bumped
it's
and
an
dumped Intel.
Inverse Cramer ETF.
Intel said, yeah.
Matt, quickly, first of all, I've noticed kind of on that topic there, you're one of the people in this business who kind of uses social media a bunch. And there are a couple maybe in the finance world, but I feel like you use it a lot more than other people. I'd love to kind of hear your thoughts on just in general what you've seen and learned on Twitter, whether it's the people, whether it's the audience, the people you can reach. And just before you do say that, I do want to give a shout out, kind of in saying that Matt does tweet out a lot. So make sure you're following his account. And he likes to come on spaces as well. So shout out to that. But yeah, Matt, love to hear your thoughts on that.
Yeah, and that's a great question. So I've been in financial services in some way, shape, or form since 1990. What I have found is most, and I'm tempted to say all, most of the advice you get out there sucks. There are some good advisors. There are a lot of advisors who are not that knowledgeable. Then there's some bad advisors. I think regardless, as an individual investor, whether you do stuff yourself or whether you delegate to an advisor, I think you've got to be educated. And and I was around during the internet bubble, and and I saw what happened to people because Wall Street controlled all the information. They had all the power, and what I saw happening after COVID, I thought was awesome. Where you've got like this whole community now on FinTwit, providing so much and a lot of it free education on money and markets. I mean, I just think what's going on here is it's awesome. Because where do you go as an investor if you want to be educated? You turn on CNBC and you hear them saying Kathy Wood's the next Warren Buffett, or Jim Cramer's the this oracle, or the fast money crew. I mean, don't even get me started on that. So I'm so happy to be involved in what's going on, and that's why I put out my newsletter every day. I mean, I don't charge for it. I try to tweet stuff I'm seeing during the day, and just try to add to the stuff that's going on, and what I get from it, and the way I think you use it is, if you're going to be trading for yourself, you want to have your own methodology. But there's so many people out there watching different things. They can put you on to stuff that you're not going to notice. I mean, this whole MCB Bank is one. I was on a plane yesterday. So, normally I'm sitting here, I got 8 screens, I'm watching a bunch of stuff. I'm sitting on a plane. All I have is my phone, and I see people starting to tweet about MCB. So I go and I look at it. I'm like, that's interesting. So I short it. And right now it's down 22%. I wouldn't have noticed that if it hadn't been for people on Twitter. And, in Signature Bank, another one, I was short Signature Bank. I mean, people on Twitter pointed that one out to me. So I think what's going on here is great. I do want to launch an ETF around some of the knowledge coming out of FinTwit. Still playing around with, how that's actually going to work. But yeah, so that's why I get involved on Twitter.
Really good.